We've got another chart breakdown focusing on Costco, supporting our spotlight on our clarity spotlight on Walmart last week. We did cover Costco, so wanted to give just a few tips or a few insights into our findings when we looked at Costco. Here's a high time frame weekly chart going back to 2006. We can see that we have this uh, supply resistance or supply line right here. We refer to it as a supply line because as price gets up to these levels, larger interest begins selling into it or bringing supply in, which pushes price behavior away from that line. We can see that Costco is currently bumping into that supply line or that resistance line. If we zoom in a little bit closer, we can see that Costco did come out, did reaccumulate here. Coming out of COVID, we see a pretty significant volume shelf is built up here. There's a new base that has been formed here that it is now has broken out of and completed the first impulsive wave, the first 5 wave cycle coming out of this reaccumulation range here, 1, 2, 3, 4, 5. Now that it's bumping up against this resistance line here, good chance we're going to see some sort of a corrective wave structure here. You can see that have labeled this as ABC. We are expecting to see some sort of a follow through to the downside here, pushing away from the resistance line and coming back down here, probably targeting this low right here. A good chance it may come down and undercut that slightly just to draw whatever liquidity they can find, basically trying to find some sellers here, people that entered long, put their stop losses just below the most recent low. Larger interests will possibly bring price down just below this level right here and try to take out any inefficiencies in this candle right there to add to their positions. So good chance Costco could possibly bounce off of this red 55-week exponential moving average somewhere in this end of October area here. That would make sense. It's in line with our seasonality. Presidential election campaign, September and October are always very volatile. So all of this is in line. We also see some bearish divergence or negative divergence. This indicator at the bottom of the screen is the relative strength index or RSI. We can see that these peaks here are declining. We go up and look at price at those levels. Price is increasing. Again, not in harmony, showing weakness. Showing a good chance that there could be either a reversal and or a change in trend. Even sharper divergence here as wave 5 is completing and moving into the first 2 waves of this corrective structure here. So the fact that we are seeing bearish or negative divergence at the end of an Elliott wave, an impulsive Elliott wave structure. So 1, 2, 3, 4, 5. Elliott, when he created his theory, he indicated that one of the tests that you want to keep an eye out for on whether or not you believe that one of these impulsive structures is coming to an end is if you see in wave 5 what you believe to be wave 5, if you see negative divergence, that would be an indicator that wave 5 is completing. So we do see that present here in Costco. Everything is pointing to a corrective move here. There's just a small reaccumulation period here, pushing away from this pushing away from its resistance and catching up to some of its longer term moving averages here. So pretty straightforward with Costco. We're looking for some pullback. If you are long in Costco, you may have a good opportunity to add to that or enter if you're looking at entering towards the end of October is when we would be looking to make that move.